Hello guys, and glad to have you on board again. Today we're going to record a number 4 session of the crypto special. This series is specifically targeted to psychological mismanagements that can be very impactful into your trading management, specifically when we are in an era in which we basically trade along with the Wyckoff patterns, whether they are distributions, accumulation, redistribution, whatever the fuck that is, because everyone is driving themselves crazy with this. So just as a quick reminder, that's the thing we've talked about into the number 3 of this series, if my memory is right. The thing to get about Wyckoff is not that the pattern happens with this wave and then this wave and then this wave and then this wave and then it goes with this and I'm going to buy the fucking dip and I'm going to do it perfectly. Jesus, that's not how it works. I've never seen any pattern in my entire career being able to catch the bottom in a psychologically driven market, because psychology is nothing that you can frame into a set of rules that will work in every given conditions. So this is not how it works, and by definition people have been totally misunderstanding the Wyckoff patterns because they are not things you can learn and apply with a copy-paste thing. These are just shaded gray area stuff meant and driven by professionals, by professional actions, and that's what I tried to let you understand the last time. So that being said, this is something I hope you know by now, so stop learning how to use Wyckoff's patterns and so on. Just start understanding that the way to profit from Wyckoff is not to find the bottom, not to find the top, but just to stop acting like an asshole, okay? So the only way to get yourself out of here is to understand that whatever the fuck is at play is bigger than you, and you can do nothing but to not give a fuck. You should just zoom out to the higher time frame, have a plan. This plan will either be right or wrong, future will tell, but at the short term movements there's nothing you can grasp but just doubts and stupid actions. So not acting, zooming out and waiting was the only thing to do to navigate efficiently the Wyckoff patterns. Congratulations if you succeeded on doing such a thing, because we might have reactivations as we speak. So today is not going to be about the Wyckoff patterns, because we might be on the verge to get the fuck out of them. But it is because there is another dangerous psychological mismanagement that some of you guys may suffer from. Not everyone, because this one isn't a general behavior, but as we deal with trend context, and that's still what I think is by far the likeliest outcome, everything suggests we're still trending the weekly charts. So all of the bear market, whatever, I don't think it's the most rational thing to go for. I might be wrong, future will tell, no one knows the truth, certainly do not I. So in that perspective, I am humbly telling you that I don't give a fuck about the bear risks, they seem so undermined to me, so I'm focused on what the charts tells me, and so far it is still a bullish weekly trend, and we'll see how long it takes to reactivate. Okay, so that is the technical assessment. So what could be the psychological mismanagement? It's generally not on the reference time frame, because as usual, those who suffer from psychological mismanagements are generally making mistakes of not figuring out the right time frame to trade on, which I couldn't stand more than that and say more than that it is the weekly damn chart that is at play. Daily chart might be worth a look on a day-to-day basis, but just once a day to look at the candle closes, and that's it. So this is what we have, and we once again look at the crypto total, and if we wanted to make a fully worth it analysis, we would have to dive into this, because it's definitely a scattered market between bitcoins and altcoins, but if we have some time, we'll eventually get there. Okay, so looking at the crypto total to just get a simpler version of what really is at play, remember that the Wyckoff structure is mostly happening into the Bitcoin sector, so there is still a question mark on whether or not the altcoins will definitely still be there to trend follow, which I still believe they do, but not all of them, okay? So that's a topic for another day. We'll spare that for the weekly updates or some more technical videos. Today is mostly orientated to psychology. So what kind of mismanagement we could get is what I like to call the contrarian trader's behavior. These are trend biases. This is a topic which I will fully detail into the trading lesson series, into this same YouTube channel, but in a different playlist. But this is basically that this is a video, the next one to be recorded actually. It's still not yet there. So what I'm going to be doing today is not explaining all about it. I will save that for that video because it will very much likely last for at least half an hour, which we definitely don't want to spend today. So I'm just going to scratch the surface to let you know the basics you need to navigate these psychological biases as efficiently as possible, because as usual, just like any biases, we don't destroy them, we work ourselves away from them. We just try to neutralize the bias impact, not destroy it. There's nothing to destroy. You're not going to change who you are. You're just going to work around with it. Okay, so psychological mismanagements in trends are to the number of 3. There is the bull bias, the bear bias, which is basically the perma-bullish bias, the way you might know it, the perma-bearish bias, and the third one, which is the less documented, but still very important one, and pretty much like 25% of traders suffer from this one, which is contrarian biases. Which means these guys have some kind of a weird mix of perma-bullish and perma-bearish biases, still not nearly following the same psychological reasons behind it. So I'm not going to go into the details with this, but understand that this is really a totally legit and separate third bias at play, not a combination of the other two. It's definitely a difference in the reasons causing this, but I'm not going to go into the details. Save that for the trading lesson itself. So just to set it simple, the basic behind these bad reasoning and bad assessments of what really is at play in the market is the fact that regarding the visions and it's basically when you got yourself in the childhood, it is where these biases creates itself. Not too many details, but basically this is the vision of the world and your set of values that will define some kind of what you think the world is. And then when you get to receive environmental response, so this is basically who the fuck you are, to make it plain simple, okay, your identity, the way you see the market through your own Googles and glasses, okay, and there is the environmental response in the bottom of it. And there's going to be interactions between the way you see things and the feedback you're going to receive from the environment. This is what creates the cognitive dissonance. Normally, there is already this video available into the YouTube channel, so you should know about the cognitive dissonance. Otherwise, I suggest you go look for that video. So the cognitive dissonance at play with the contrarian biases is that basically you're going to reject extreme sentiments. So anything, something out of the ordinary, or supposedly out of the ordinary, because this is your own prism of vision, okay, your own prison in which you actually think about stuff, but don't necessarily mean the environment behaves that way. It's just the way you see things and consider them as being the reality, okay? And sometimes you're going to be right, and of course, sometimes the environmental response will be totally contradictory. And the human behaviors generally don't like that. Humans tend to like to be right, and sometimes even fool themselves to look like if they were right, because it's more pleasant to be right rather than accept that you were wrong. Okay? Just make it plain simple. We're not going to go into the details in here. So these cognitive dissonance, the contrarian biases, lies on the fact that anytime something is, seems to go too something, like too bullish or too bearish, gonna create something very fuckingly weird into your brain that this is not normal and that therefore the market will automatically correct itself. So it goes too bullish, so it will inevitably reverse to correct the mistake. Well, just saying it out loud should let you understand that this is absolute bullshit, and that definitely the trading doesn't work that way. The market doesn't nearly give a fuck about your standards and personal prism. To look at the reality, the market is nothing like you. The market is the market. Period. So this is by definition the stupidest way to trade the market, to think of it as it's gone too far that direction, it will definitely go the opposite way. Still, that's exactly what has gone on since we might be on the verge to terminate the week-off pattern. We have clear signs of recovery. I've made it clear that the volume going down to like total unexistence in a global crypto market where volatility has destroyed itself. I let you know that we very likely were going for an alternate week-off structure, not with a flush, not with a spring, but with a boring reversal. And here we go. I expected this thing to be boringly recovering. Instead of this, we're going fast. But to be honest, do I nearly give a fuck? No, I don't. I'm not the one to decide if the market has to go slowly or bullish by breaking every intermediate resistance like there was nothing. Of course, these things, as some people tend to decide how the market should go from point A to point B, which I don't nearly do. I have my personal favorite structures, and like I said, I was expecting a boring recovery. Well, turns out we have a faster one. Is that going to change anything on my end? I just wanted the market to reactivate. It does bullishly, much more than I expected. Does that even mean that this is going to reverse because we've gone too fast? Jesus, no. Jesus, no. It makes no sense. But I am the ones, I am one of these people who are basically been suffering from these things. So I was a contrarian trader back then. I've worked myself out of these irrational behaviors a long time ago, and I hope you don't suffer from this now. If you're thinking that the recovery has gone too fast and it's not normal, though it's going to collapse, Jesus, that is the contrarian biases at play, and you definitely don't want to fall for it, okay? Because the worst part of it is that you actually turned out to be bullish in this market. You suffered from heavy tension into your brain, to the fact that the week-off pattern was meant to create these tensions. If you succeeded not to fail for them, then now that you've got the recovery, please make sure you're not going to convince yourself that the recovery is too fast and that it means that we're going to fuck it all up. This would be the stupidest thing to do, suffering all the pressure to just release it when you finally might be proven right. Okay? So that is the reality. Just don't convince yourself that as now it's finally going your way, then it's not doing the way you wanted it to be. Like it's going too fast, so that means something. Well, no, that doesn't mean anything. Why? Because generally the number one mistake that causes these biases and that can fuel them is when they occur in ranges, okay? So don't forget that the contrarian traders will have most of their troubles dealing with ranges inside trends. Most importantly, the damn pullbacks. And it's getting even worse when we are dealing with multi-time frame trends. These are the worst enemies for contrarian traders. Things that looks extreme. But things that looks a bit extremes like that, when we fuck up both the support and resistance context, looks excessive. Contrarian traders will say, damn it, it's going way too fast, it's going to go violently to the opposite direction. Yes, sometimes it does. And we have one example in which it actually did. But there was other reasons for us to profit take into these areas, way more than just the fact that the market was going too high too fast, okay? So think of it that way. If you have a natural contrarian bias, pay real attention to two things. Do you feel these things inside a range? If you do, then stop. Just make it plain simple and go back to your natural range biases. Think of it simple. Is the range mature? Yes or no? If it is, then don't give a fuck about whatever happens inside that mature range. It's just noise that you shouldn't even care about. If the range is not mature, then where the fuck could the third range boundary be? Because that's the only question you might wonder. When you get into this third range boundary area, do you have signals to trade or not, and so on? It's really that simple thing. Navigating ranges isn't complicated. You are the one to make them complicated. And that's one of the typical mistakes for contrarian traders, okay? But remember that the contrarian bias comes from trending context. So you will have this bias when the market is ranging inside trends, which is exactly what we're doing now. So the contrarian bias are definitely in their most attractive context to be at play. So please don't fall for them, okay? The second thing, which is also a thing that we've been at play into the crypto market, is multi-time frame trends, okay? When things look a bit extreme, and it definitely was, don't get me wrong, it definitely has been fucking extreme. But one time, when you have these things, when the market behaves quite extremely, that means valuations are not deriving from these contexts. They generally tend to do from higher ones. So before considering that it's too extreme, we're going too high too fast, we're going to destroy the fuck out of these trends, well, just ask yourself what the hell is going on the high time frame. Because if we have multi-time frame trends, then going extreme on the shorter time frames of these multi-time frame trends isn't abnormal, it is definitely the standard. So did we break the weekly time frames? Well, we did. We have hell of a mature range in the weekly chart time frame, and we broke it clearly and significantly to the upside, and the weekly trend, sorry to say it once again, is totally still valid. So until proven wrong, I'm gonna act like it is the way it is. It's bullish, period. I'm trend following the weekly chart, okay? And in that perspective, all of these short-term noises and the irrational behaviors you think of are probably no more than a daily range inside a weekly trend. So this is something that creates irrational trend feelings, specifically for those who have natural contrarian biases, because anytime the market moves too fast, you're going to think like you want to fight against, like it's gone that way to the downside, and you were like, man, it's going too low, that's not normal. Well, of course, because we were on supportive areas, but that never has been a reason to buy. We weren't buying because the market was going too fast to the downside. We were buying because we were on the goddamn supportive area and we had signals to support. So don't mix things together. Just like now, we might going too fast into the opposite direction doesn't nearly mean that something bearish is going to come out of it. Okay? And most importantly, we might be reactivating fast because we are in higher time frame trends. So going fast in here doesn't seem abnormal to me at all. And to be honest, I even think it's going to keep going. Okay? So we'll see all about that. I'll go into more details of the technicals themselves throughout the weekly updates. And these things today is more just about the psychological mismanagement's risks. So in that perspective, please do not fall for the contrarian biases if you feel like you're corresponding to the descriptions I made. Okay? The rapid recent growth isn't the sign of a descending whatever distribution. It's just we're in a range and we're going from bottom to top, and we're still not yet at the top, to be honest. So the area you should care about is not even the current one. You should live it up to the upside till we actually reach out the resistance territory. And this is where we'll give a fuck about price movements. And to be honest, we shouldn't even care, because the 4-hour range is goddamn mature already. Okay? It is by far pretty damn mature. Wave 1, 2, 3, 4, 5, and 6. So this is just a goddamn range. Okay? We've broken the first range boundary, or at least we try to do it now. We'll see if it's a success or a failure first, but we also need to break the previous range to make sure that we get out of this. So I think this is where the market is going to hesitate. Hesitate, yes. Reverse? Who tells that? We don't know. Yes, it can reverse. Yes, it can keep pushing. That's mostly the reason why we're very likely going to range into the nearby area, or in my personal opinion, slightly higher, mostly closer to these previous resistances. Then are we going to range below? Are we going to range above? Are we going to range right across? I goddamn don't know. All I know is that hesitation is definitely something that we might experience in the forthcoming days. So I don't expect the market to keep surging that way. I expect the market to just range. But what structure will this range be or look like? Do you think I'm a magician? The range is mature, so I don't nearly care about what's going to go on. I just care about, are we going to break this resistance or are we going to fail? And if we fail, are we going to succeed pulling back to the support, which will definitely be the signs of a very dangerous breakout patterns? Or we just kind of retrace a bit until hopefully we go bullish, because to be honest, I think the probabilities are far more bullish than bearish. Not because of what's going on into this range, because this is just as neutral as it can be. No one knows where this thing is going in the 4-hour reference charts. But we have slightly more upside potential due to higher time frame trends. The higher time frames generally dictate the rules. That doesn't mean they rule all by themselves. There is still chaos, an external factor that can fuck up bullish perspectives of cryptocurrencies. But technically speaking, the risks are slightly more to the upside right now. And that's what I've always defended and will always defend as long as I am not proven wrong, which I am not for now. See you guys later.